All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world. Happy Monday, everybody. Hope you all had a wonderful weekend. Today is August 10th, 2026. Our top story this morning, Intel is the latest tech company to join the parade of stock issuance. Today, announcing $15 billion worth of new shares that will be issued to the market, diluting existing shareholders. Intel stock's down about 5% on this news as of the making of this video. And they're joining a long line of companies that are issuing shares in order to take advantage of this AI bubble, boom, whatever you want to call it, and raise cash. The biggest of which we had Google issued $80 to $85 billion worth of shares earlier this year. Meta is rumored to be just behind them with tens of billions of share issuance, although we haven't had any clarity on that one since it was first rumored back in July. We've got Oracle is issuing some $50 billion worth of debt and equity this year in order to raise money for data centers, of course. Supermicro is issuing $7 billion of stock. That goes nice with the founder getting arrested for chip smuggling in China. And of course, the SpaceX IPO, who could forget that one, the $75 billion that was raised there. And of course, this is on top of all of the bond offerings that these companies are making and all of the special purpose vehicle off balance sheet debt that they're all taking out, rumored to be somewhere around $1.1 trillion. More money to be poured on the fire of the AI bubble this morning, courtesy of Intel. And so far, the market has been willing to gobble it up, although there are signs of indigestion, especially in the bond market to that effect. Now, the other big story going on this morning is low river levels in Europe. Europe finds themselves in the midst of a severe drought in certain areas. In particular, it's the Danube and the Rhine that are causing issues. And we've kind of hinted about the Danube in some of the prior shows, in particular Romania and the power problems going on there. Romania has blown up rock formations to divert the river. They have dredged in front of the power plant, and they sank barges to try to get the water to pool up around the intake of this power plant. And it bought them 9 days. They were able to raise the water level in front of the plant by about 1.5 inches, and they think they have 9 more days of operations at this power plant because of that. Hungary has already shut down their big nuclear plant, which provides up to half of their power grid. This Romanian plant is about 20% of Romania's power grid, so the government is urging people to conserve. Looks like the possibility of rolling blackouts for parts of Eastern Europe. Now, as that's going on, we've got further to the west in Germany, we've got chemical production is now being curtailed along the Rhine. Several companies have declared force majeure as it's getting harder to transport these chemicals up and down the river because of draft. The water level is too low, so they're having to, in some cases, cancel shipments altogether. In other cases, send lighter, smaller shipments that don't draw as much. And this is a petrochemical industry that is already in trouble because of everything going on in Iran. So that's causing problems there. And then also back on the Danube, this is affecting food production as well. In particular, Black Sea grain shipments out of Romania, which rely on the Danube River to reach the Black Sea. And you may recall Black Sea grain shipments are already having problems because of what's going on in the war in Ukraine. The Russians and Ukrainians have been trading drones and missiles targeting ships. And we talked about a few weeks ago how the grain shipments out of the port of Odessa in Ukraine had been reduced by about a third, thanks to Russian missile attacks on grain export infrastructure. So the fact that the Danube level is dropping, affecting exports into the Black Sea when Black Sea exports are already sharply lower, certainly is not helping things. They're trying to redirect some of these shipments by rail and by truck, but that's more expensive. And of course, you can only absorb so much capacity before you run out of trucks and rail cars. And so more problems on the horizon being caused by these low water levels in Europe. And it's a story that is developing. Typically, these droughts hit their peak in the fall, so we've got several weeks of this to go. Now, meanwhile, the other big shortage issue, if you will, oil is higher this morning by a couple of bucks. President Trump has hinted that he will let economic pressure do the work in Iran. In other words, he is getting further away from additional military strikes or any kind of threatened big barrages or the capture of strategic islands or attacking critical bridge and oil infrastructure. Instead, they just want to let the economic pressure do the work. Now, we talked late last week, especially on Friday, there was a story about an Iranian state bank had frozen the accounts of the National Iranian Oil Company, or NIOC. That indicates liquidity problems going on there. Now, there was also some stories late last week about several entities in the UAE being added to the OFAC list, in other words, sanctioned by the U.S. government. Several forex exchanges, gold exchanges, and energy trading companies that were actually fronts for the Iranians that have all been sanctioned now. And when they get sanctioned, their money gets frozen, stuck in place. And that happened right around the time that the Iranian state bank was freezing the bank accounts of the National Iranian Oil Company. So it's really hard to know what's going on inside Iran economically. We obviously don't have a lot of visibility into that data. But when you look at some of these other stories that are going around and the information that is getting out, you know there are some economic problems happening, right? The Iranian rial is in free fall. You'd have to be an idiot or completely immersed in propaganda to believe otherwise. That being said, it's hard to know the extent to which that's happening because we just don't have that much visibility into that data. Now, the flip side here is the economic harm that the Iranians are inflicting on the rest of the world by keeping the Strait of Hormuz and, by extension, the Bab el-Mandeb Strait shut down. And so the big variable there, besides the dumping of the Strategic Petroleum Reserve here in the United States, has been the reduction of Chinese oil imports. That was one of the big variables that maybe the Iranians didn't see coming. Certainly I didn't see it coming, that the Chinese would have reduced their oil imports by several million barrels per day. They were as high as 11 or 12 million barrels per day before the conflict started, and they went down as low as 6. Now we've got some indication that Chinese oil imports are starting to increase again. You would have expected some of that in the month of June because of the memorandum of understanding and the reopening of the strait, but right now it looks like the Chinese imports are heading back in the other direction, which should put upward pressure on oil prices. But those oil prices remain stubbornly subdued. We're still sitting in the 70s, albeit barely, hovering around $80 a barrel this morning. But I think a lot of people, if you would have asked a few years ago, hey, if the Strait of Hormuz were to be shut down for 150 days, what do you think the price of oil would be? It would be high triple digits for a lot of people, self included. Also going on this morning, we've got Marathon Digital as a Bitcoin treasury company / Bitcoin miner turned data center operator. They have sold $1.6 billion worth of Bitcoin to fund corporate operations. You can add that to Strategy, who is also selling Bitcoin this morning, as well as selling MicroStrategy shares in order to buy back shares of Stretch. We've got Meta has released a scaled down version, or a scaled down AI model, a distilled version that consumers can use at home. In other words, no data center. It runs on local equipment. And it also means Meta is also going to give this away for free. You can download this distilled app for free. So a free product that doesn't require Meta's data center to operate. In other words, if you're using this, you are the product, much like Meta's other services. They're going to be collecting data, and that's how they intend to make money off of it. It's kind of a low return on investment considering everything that Meta has spent on AI CapEx, but that's a discussion for another day. And for now, the market continues to not care whether anybody actually makes money or not. Some point they're going to care again, but it ain't today. And last but not least, we've got to talk about CalPERS is backing a $300 million continuation vehicle being run by Apollo for a beverage maker. And that's interesting. This trend of private equity dumping their assets into pension funds, it continues. And if you're not familiar, a continuation vehicle is when a private equity firm, Apollo, takes an investment in one of their funds, and then they raise money from other investors, and they sell that investment to their other fund, and then they use the money they raise from the new investors to pay back the old investors. And if that sounds a little bit like a Ponzi scheme, it's only because that's a little bit like a Ponzi scheme. That's kind of how that works. Maybe not word for word a Ponzi scheme, but it's pretty damn close. And again, the target dumping ground is CalPERS, the California Public Employee Retirement System, the biggest pension fund in the country. Beginning to see a pattern here. Stick around to the end of the show for that one. But first, we must shrink my big melon of a head and let's see what's going on in the world of finance today. Don't forget that like button and that subscribe button for the YouTube algorithm. So you can come back tomorrow and have your coffee with us, Melonheads, because we do this every business day. Right now, the S&P 500 is marginally lower, down by about 0.1%, 8.5 points in the red, going a whole bunch of nowhere. We've got the Dow is off by 150 points, or 0.28% lower ahead of the open. And the NASDAQ is lower by 39 points, or 0.13% in the red this morning. Stocks are down, but not by much. The dollar is a little bit stronger this morning, 21 basis points higher here at 99.75. It's also important to check in on the JPY, the Japanese yen. Here we are looking at USD, JPY. And of course, this was the big yen intervention that we saw last week, or I guess it was 2 weeks ago now. And you will notice after bottoming, the yen is once again, or the chart is once again climbing, which means the yen is once again falling. The second the government takes their fingers off the scale, we are right back to your regularly scheduled depreciation of the yen. Kind of like the last time they intervened here, it just started declining again. Then they intervene again, and now we're just starting to decline again. If they don't fix the underlying fiscal issues in Japan, this will only continue. And, well, they're saying the BOJ is going to hike interest rates, but the finance ministry in Japan has no intention of doing anything about their debt to GDP problems in that country. So this will likely continue for the foreseeable future. Looking over at the bond market, we've got yields are a little bit higher this morning. The 30-year Treasury's at 5.221. That's higher by a point and change. The 10-year yield is at 4.683, higher by 2.5 points. The 2-year yield is at 4.230, higher by almost 3 points. And the 1 month is unchanged at 3.696. Looking over at Bitcoin, we're relatively unchanged this morning, $64,885. That's higher by about $37 as priced on Coinbase. We do have a little bit of Bitcoin news here. Bitcoin miner Marathon Digital sells $1.6 billion in Bitcoin. We've got another treasury company slash miner slash data center operator that is dumping Bitcoin in order to raise cash. Bitcoin miner Mara Holdings, formerly Marathon Digital, has reportedly sold $1.6 billion worth of Bitcoin in the first half of 2026. This comes as the Bitcoin treasury company Strategy is also selling Bitcoin, which is weighing on the crypto market. In a 10Q filing, Mara revealed that it sold 23,093 Bitcoin worth approximately $1.63 billion. The Bitcoin miner sold the coins for an average cost of $70,631. The sale represents a significant cut in Mara's Bitcoin reserves. The company held 35,577 Bitcoin as of June 30th. That was down from 53,822 Bitcoin at the end of 2025. The Bitcoin sales assisted in funding operations, said Mara. The proceeds also were used for investments and liquidity needs. The company's policy for its treasury was changed this year, as it can now sell the Bitcoin it already has in its portfolio. And they're talking about liquidity needs and investments, so they're paying their debt service costs, and they're also paying for some of their data center investments that Marathon has been making. Mara Holdings stock is a little bit lower. They were down, looks like yesterday on this news, by about 5.25%, or Friday they were down 5.25%. They're down another 0.8% this morning. Year to date, though, Marathon Holdings is up by 12% and change, but down by about 36.7 over the last 12 months. Looking at the commodities board, we've got gold is a little bit weaker this morning, probably that stronger dollar. $4,333 for spot gold, off by $8 or 0.18%. Considering the week gold had last week, that's not half bad. Spot silver, meanwhile, is in the green again this morning, 36 cents higher, or 0.58% to the upside. $63.94 for spot silver. I like the shiny. Copper's higher by 0.25%. Platinum is lower by 0.68%. Platinum had a great week last week, as did palladium, lower by 0.75% this morning. We've got crude oil is up by $1.40. We'll talk about crude in a minute here, $79.60 for September WTI futures. But first, let's talk about what's going on with Intel, shall we? Intel selling $15 billion in common stock as AI demand booms. Intel said it will be offering $15 billion in common stock, taking advantage of renewed interest in its business prospects during the AI data center boom. The money will be used for general corporate purposes, Intel said in a statement on Monday. Progress in emerging areas, including physical AI, purpose-built silicon, advanced packaging, and external wafers represent significant growth opportunities for Intel, the company said. The offering is intended to further enable Intel to pursue growth opportunities ahead while maintaining a strong balance sheet and its commitment to an investment-grade rating. Intel shares have nearly tripled in value so far this year to 101.65 as it works on a turnaround of its business. While it doesn't lead in AI-specific chips, data center demand has increased sales of its central processing units. Sales in Intel's data center segment soared 59% last quarter, more than double the pace of Intel's overall revenue. Still, the company is working to line up significant outside customers for its factories. Again, remember the whole point behind that government investment in Intel was that they were going to build chip fabs here in the United States. We don't hear very much about that. We hear about all this AI bullshit all the time, but I don't hear a lot about domestic chip manufacturing, which was the point. Intel stock currently down by about 3.7% off the lows of the morning. It was down more than 5% at one point. 97.89 a share for Intel. And over the last 12 months, well, this thing has just been ripping up 414% in the last 12 months for Intel. All right, let's talk about the water levels in Europe now, because this is going to start causing problems, or I should say it's already causing problems. It's just people aren't really talking about it that much. Romania says nuclear reactor can run for 9 days after redirecting Danube water. 9 whole days they bought themselves. Romania said its only working nuclear reactor can operate for a further 9 days after it redirected the flow of its drought-hit Danube River to supply the turbines with water. The EU country has already declared a state of emergency throughout August and asked companies and households to voluntarily reduce consumption during peak evening hours. The Energy Ministry has blown up a rock obstruction, dredged the riverbed, and sunk 4 barges filled with rocks to create a dike and redirect water flows, which it said has increased water levels around the reactor by 4 centimeters, or about 1.57 inches. Record low water levels on the Danube have already forced the shutdown of 1 reactor, impairing power output in Romania, and upstream in neighboring Hungary. Romania's 2 reactors normally account for 20% of the country's power output. So this is pretty significant. Hungary has already had to shut down their nuclear reactors. That's about 50% of Hungary's power capacity. Now Romania may have to shut down its 20% of output. They've already shut down 1 reactor at the site. The other is still operating, but they've managed to buy themselves 9 days with blowing up rock formations and dredging the river. And then we've got all kinds of problems happening in Germany on the Rhine. Lowest ever Rhine levels disrupt chemical production. Drought breaks 2018 record, but companies say they're better prepared. Record low water levels on the Rhine River, a major thoroughfare for Europe's chemical industry, are disrupting chemical supply chains for the second time in 8 years. Let's talk about some of these disruptions. Chemicals make up 11% of commodity traffic on the Rhine. The river links the ports of Rotterdam, the Netherlands, Antwerp, Belgium, and some of Europe's largest chemical clusters, including the lower Rhine region, as well as Cologne Chemical Corridor. And, oh man, don't make me pronounce German stuff this morning. Okay, what do we got? Ludwigshafen? How do I say that, my Deutsch friends out there? Ludwigshafen, Germany. Low water levels put a stop to large chemical barges, which require at least 40 centimeters of depth. BASF, which operates a major plant in Ludwigshafen, has declared force majeure on various surfactants produced at its European site due to a shortage of raw materials. But CEO Marcus Kamith told investors in a recent conference call that BASF is much better prepared than it was 8 years ago when Rhine disruptions forced the company to shut its Toulon, how do you say, diosisonate? Oh man, it's some chemical thing that they produced in Ludwigshafen. The company is now deploying specialized low water vessels and increasing its use of rail and road freight to keep raw materials and products moving. We're really pushing the boundaries of my pronunciation this morning. Similarly, Evonik Industries is shifting freight to rail and road and sailing partially loaded ships while water levels still allow it. Central locks are still in operation and entry and exit into important canals is still possible, the spokesperson said in an email, adding that Evonik sites in Germany are running as usual for now. NAO says it has been able to maintain capacity at its plant in Cologne by lining up alternative transport routes. It's supplying customers from other European facilities where necessary. We have contingency plans in place should levels decrease further, but we're not at that stage today, NAO's managing director and works manager Patrick Giefer said in an email. Covestro has cut production at its sites in the Lower Line region as restricted barge traffic has constrained raw material supply. The company is chartering vessels with reduced loads and increasing sailing frequency to compensate for smaller loads per trip. We're also building up raw material inventories several weeks ago as a precaution, the spokesperson said in an email. So all kinds of chemical disruptions happening along the Rhine in Germany. All right, so it's affecting power production, it's affecting chemicals, and it's affecting grain shipments. Record low Danube strains vital route for Black Sea grain. Black Sea grain already having problems, you may have guessed. Black Sea grain exports are facing fresh constraints as record low Danube levels restrict flows through Romania, just as escalating Russian strikes divert Ukrainian grain from Odessa and other ports. The Black Sea is the primary export gateway for Russia and Ukraine, the two agricultural powerhouses that together account for more than a quarter of global wheat exports. Intensified attacks by both sides on grain infrastructure and vessels in the region have renewed concerns over the reliability of shipments from one of the world's most important breadbaskets, adding risk to global food supplies already battered by bad weather. That's since Russia's full-scale invasion in 2022, Romania's Constanta port has become a critical alternative exit port for Ukrainian grain to get to global markets. Typically, cargo from Ukraine reaches the port by rail, road, and barge along the Danube, but heat waves and the absence of rain have lowered water levels on the river, forcing vessels to carry lighter loads. That's making river freight pricier, with the knock-on effect that's adding costs and delays to road and rail transport just when the Black Sea export corridor needs backup. It's also hindering flows from Romania, a major contributor to European Union grain shipments. All right, so low water levels causing all kinds of problems in Europe, on top of existing problems we have in petrochemical from Iran and grain shipments in Ukraine and Russia. So, man, keep an eye on rainfall in Europe now. Very 2020s kind of story here. All right, back on the Middle East. Trump hints U.S. will let economic pressure on Iran do the work. President Donald Trump signaled he's prepared to let economic pressure on Iran build rather than launch fresh military strikes, saying the U.S. was only semi-negotiating with Tehran on the Strait of Hormuz. It's a funny way of saying we've been negotiating with ourselves while the Iranians have been negotiating with themselves. Typically, ceasefire peace negotiations require two sides to negotiate with each other. We're getting back to basics here, but suffice it to say we are still very far apart on this. We are just watching Iran with its huge inflation and the fact that they have no money, Trump told Axios in an interview on Sunday, saying that the U.S. naval blockade of the country was deepening its financial woes. We are low-keying it. Low-keying it. All right, don't you just love when an octogenarian politician tries to sound edgy by saying low-key? Yeah, okay. But that all aside, it's debatable the extent to which they're inflicting harm on the Iranians, but obviously it is inflicting harm on the Iranians, the blockade on the Strait of Hormuz, at least on our side. The outside is affecting the Iranians' ability to get their oil to market. The president's comment marked a shift from his repeated threats to escalate the bombing campaign against Iran and comes amid lingering talks between the Islamic Republic and Oman to reopen the Strait of Hormuz to maritime shipping. Tehran has said it's nearing a deal on the waterway while laying out a long list of demands for Washington before shipping can resume, including the lifting of sanctions and an end to attacks on Iranian-backed groups across the Middle East. Tehran also elevated a hardline former commander to its top security post over the weekend. The fact that they're promoting this IRGC hardliner to a security post suggests that Iran is not going to become more flexible in their negotiations in the future. So, look, rather than try to beat them into submission with another airstrike using more munitions that the United States is running low on, and, of course, risking more counterattack, which would further drain interceptor stockpiles, which we're also running low on, they're just going to leave the blockade in place and wait for them to run out of money. And we don't know when they'll run out of money, but we know they will eventually run out of money. And the fact that their bank froze their oil company last week says they're probably closer than the Iranians would like to let on. We don't know how much closer, but they're pretty close, apparently. But, we've got problems too, right? Because the price of oil, $79.89 here, it's sitting right around $80, we'll say. It's still about $15 a barrel higher than it was before this conflict started. And it's probably going to continue to grind higher the longer this conflict goes on. Maybe we go back into the 120s, maybe not. But there is signs of some upward pricing pressure on oil this morning. China's crude imports bounced back after historic June slump. China's crude oil imports reversed an earlier decline, rising by 22% from June to an average daily of 8.45 million barrels per day, or a total of 35.73 million tons, Bloomberg reported today, citing customs data. China slashed its total crude oil imports to a decade low in June, culminating 3 months of very low import levels amid high prices and constrained supply from the Middle East. Beijing could afford to dramatically reduce its crude buying, slashing import volumes in June by an estimated 4.4 million barrels per day compared to the 2025 average. I don't think many people saw that coming. The fact that the Chinese cut their imports by so much really surprised a lot of people. And that's why oil prices, or one of the biggest reasons why oil prices didn't rise faster than they did. The reason China was able to do that was that it had, at the end of 2025, the country held the world's biggest stockpile of oil inventories at 1.397 billion barrels. That's according to estimates by the U.S. Energy Information Administration. That was more than the combined strategic inventories of the United States, Japan, OECD, Europe, Saudi Arabia, South Korea, Iran, the UAE, and India, the countries next down the list of the world's top holders of strategic oil reserves. China had a huge stockpile of oil at the start of this conflict. And so they were able to tap those reserves in oil in order to import less. Now, China can't do that forever because unlike most of those other countries on the list, Japan and Europe notwithstanding, China doesn't have very much oil production. They're hopelessly dependent on imports. The United States, for example, we have a dwindling strategic petroleum reserve. We tapped it in 2022. We're tapping it again. But we're also the biggest producer of oil in the world, or at least one of the biggest producer of oil in the world. So if we get cut off from exports, we've still got oil coming in. The Chinese don't have that. And the fact that they were burning somewhere around 4 million barrels a day of their reserves, all right, and the conflict has now been going for say 150 days. So just do the math right, 4 times 150. Oh my God, it's amazing how hard I'm having to. Yeah, you think I would have done that in my head. Thank you. 600 million barrels roughly, just by my estimates here, that the Chinese would have dumped from their reserves if they were really doing 4 million barrels a day since the onset of this conflict. So as big as their reserve stockpile was, almost 1.4 billion barrels, they've probably burned through at least a third of that since this conflict started. So they can't do that forever. And we're starting to see those imports climb. Now, as those Chinese imports return towards normal, that's going to drive this oil chart further to the upside, higher. That's going to increase the economic pain that the rest of the world is feeling, which is going to increase the pressure on the U.S. to back off in this conflict. So that's the other side of this, right? When do the Iranians run out of money? And when does the United States pressure geopolitically to abandon the conflict because of higher oil prices everywhere else in the world? That's the calculus here. It's a war of economic attrition. And I don't know who gets first here. I really don't. But there's no shortage of propaganda, we'll say, on either side. This guy's all full of shit, so weak and paper tiger, and blah, we're jihadis and we'll never surrender. Yeah, okay. You're both full of shit. All right. It's just a matter of who caves first. The Iranians obviously have much higher pain tolerance than the United States has, and certainly more political will than the United States has. But it's not infinite. Certainly not infinite. And they're already at a pretty significant pain point with the collapse of the rial. And that being said, if the price of oil goes back to $100 a barrel, you can bet President Trump is going to back off because he doesn't want to get his clock cleaned in the midterms. All right. Meanwhile, we've got Meta releases scaled down AI model and consumers can use at home. Meta is introducing a new AI model that's light enough to run on a single computer, allowing users to download and customize the technology. The new Muse Glimmer. Oh my God, I hate the names of these Meta models. They are the worst. First Muse Spark, now Muse Glimmer. All right. The Muse Glimmer is a distilled version of the company's Muse Spark 1.2 model, designed with a focus on efficiency to minimize system requirements, Meta said on Monday. At 30 billion parameters, the Muse Glimmer is small enough to need only one graphics card to power its work, which will primarily involve agent-like AI tasks such as schedule management and file organization, according to Meta. The weights or values that help the AI system make decisions for Muse Glimmer will be available on Hugging Face. Meta intends to make the weights for a version of the more powerful Muse Spark available as well. There is no fee for download, though users would bear their own computing costs. The move to release these AI models under a permissive license mirrors competition in China, where startups like DeepSeek and Moonshot, along with internet giant Alibaba, have adopted the practice to attract large numbers of users. All right, so it can do schedule management and file organization. If you want to turn this scaled down AI bot loose on your own machine to wreak havoc with your personal files, have fun with that one. But how is Meta making money off of this? It doesn't use data centers, so they're not selling any tokens. It's not going to help with their compute rental business that they're supposedly rolling out. They're not charging you for the download. The product is free, so there's no license fees or anything like that. How's Meta going to make money? They're going to sell your data. That's how. You're going to let this thing on your computer. It's going to learn everything there is to know about you, and it's going to report that back to Meta, and they're going to use it to sell ads. Maybe that's a good business, maybe not. It doesn't strike me as justifying the amount of money that Meta is spending, but at least they're doing something with it. I mean, up until this point, Meta has just spent money and had no prospects whatsoever of any revenue from this stuff. Meta stocks higher by about 0.75% this morning, $596.21 a share for Meta. Year to date, the stock is still down 10.3%, although it's worth pointing out that they have now recaptured most of the losses that they incurred following that earnings report, where they missed earnings and yet the CapEx did not go away. So Meta's kind of a market laggard at this point. All right, last one of the day. CalPERS backs beverage deal as pensions step up in secondaries. More pension funds being used as dumping ground for illiquid assets from private equity firms. Apollo Global Management and California Public Employees Retirement System are backing a deal to extend a private equity firm's ownership of a beverage manufacturer, reflecting pensions' growing role in the secondaries market. The continuation vehicle for Mountaintop Beverage, which makes drinks that don't require refrigeration for coffee, tea, and dairy brands, raised about $300 million, said Jared Stein, co-founder of the buyout firm Monogram Capital Partners. He declined to comment on the fund's investors. This allows us to obviously crystallize a very significant return for Monogram's second private equity firm and to restock the balance sheet for very ambitious growth, said Stein, whose market backs consumer-focused companies in the lower middle market. The participation of CalPERS, the biggest U.S. public pension, reflects institutions' growing involvement in the secondaries markets. Some pensions have historically been skeptical of continuation vehicles because private equity firms act as both the buyer and seller of the asset, but elevated interest rates have slowed deal-making in recent years, making pensions and other investors warm to secondaries because they don't have any other options. They can't IPO these companies. They won't get any money for them, and so they're just selling it to themselves and inflating the price. Apollo's S3 business led the continuation vehicle, according to people familiar with the matter. Such vehicles allow private equity firms to move prized or hard-to-sell assets into new funds, raising money from new investors and returning capital to the original backers. Ah, yes, that old raising money from new investors to pay imaginary returns to prior investors. In other words, a Ponzi scheme, and coming to a pension near you, apparently, courtesy of private equity. If only somebody had been warning that this was going on for several years now, yet it just keeps happening. Hey guys, I just want to say thank you very much for everybody having your coffee with the Melonheads this morning. Don't forget that like button and that subscribe button on the way out. I'll see you guys again tomorrow. Thank you also to my magnanimous Melonhead members on YouTube, memberships, Patreon, and Buy Me a Coffee for supporting the channel. Links down below, should you feel so inclined. Hi Mom, hi Dad, love you guys. Everybody, till next time, live small and dream big.